Hi guys, welcome back to the channel. So someone just asked me to make a video of BBMA, uh, just to talk more about BBMA, or how to use it, and what to look for on BBMA, guys. So I'm just going to recap on the last videos, then um, I will be continuing, and today I'll be using a replay function on TradingView, guys. So on TradingView, guys, you still have, there is BBMA, which is already set. You just have to go to indicators, type BBMA. So the one that I like is BBMA Trend Vision. That's the one I like. That's the one I like seeing. So what you should understand is that in BBMA, guys, you cannot use BBMA alone. You will not filter good trades, guys. You won't have good trades. You will have more losses. So some trades you must avoid. Because remember, if you don't avoid some of these trades, you are going to be a loser more than you are a winner. So you just have to avoid them. So if your strategy can make you avoid trades, then you have a good strategy, guys. As well as your strategy can make you to avoid a trade, I think you have something there. But if your strategy cannot tell you to avoid this kind of a trade, then you still have a long way to go. So without a waste of time, guys, let me just go in. So I'll be using a replay function. While using the replay function, guys, I'll be just going randomly through a re-entry, what happened on that re-entry and what to look for. What were we looking for on that re-entry? So my network is very slow. That's why this thing is not showing as I thought it would. So, but anyway, guys, let's just start with this one. So let me just take off these lines. Take off that line. So I already forgot to tell you about the recap, guys. So remember, in BBMA, guys, you have extreme, you have this. These are the things which are there in BBMA, guys. You have your extremes, you have your CSDs, you have your MLV, you have your CSM candles. Those are the names of the candles that you have on BBMA. So it's a BBMA system, guys. So those candles, you must know which candle is which and what comes out, what comes after which candles, those kind of things. Those are the things that you must familiarize yourself with so that you can trade using BBMA. So the other thing about BBMA, guys, is that it doesn't work alone. You should know your support and resistance is very important. You should know that, guys. And what I use it for as a trader, I use it also with I use BBMA with supply and demand. So supply and demand, it works, guys. It works magic. I tell you, it works magic. If you can see just how it works magic. I'm telling you, you will see something. Today you're going to see something with what I'm telling you about the BBMA. So maybe you'll start practicing it more. Remember, you have to practice it. You have to back test your BBMA strategy. You have to back test the system in order so that you are familiar with the system, and because sometimes you'll make mistakes because you are in a hurry. So sometimes you make mistakes, but if you just take a step back and look at what BBMA guys is doing, I tell you, you'll make an improvement in your trading, guys. So okay, let me just go through this one here, guys. This trade here, I think this is today's trade. So as you can see, guys, let me just do this and see what is happening. So guys, as you can see, we are on a daily time frame here. So if you're on a daily time frame, guys, and you can see that the market is moving down, as you can see, the market is moving down. And while the market is moving down, guys, you can see that we have this bullish candle, but we are still bearish, guys. Remember what what I told you, in fact, about the break of structure and the CDS, the CSD, sorry, the CSD. It's either you'll see a break of structure or a CSD, then you'll have a re-entry for the market to change direction. So candlestick direction, that's your CSD. So that will tell you that the market has changed the direction, guys. So like here, so as you can see, you have this candle there that tells you that the market has changed the direction to the downside, so you must take a trade. You have this candle there that tells you the market has changed the direction, then you'll have something to take on with that, guys. So while we are still on that, guys, remember, after a CSD, you have to have a re-entry. So what the system tells us, guys, is, let me just do this. So if this, guys, if this is your price, and let me just do this here, and this, no, let me just take it back. Excuse me. So now, if this is my BBA, my Bollinger Band here. Now let me just do it on the Bollinger Band, so that we can, right. So if this is my Bollinger Band, guys, and the price goes above that, outside of the Bollinger Band, you know, the price shouldn't be outside of the Bollinger Band. So if you see price outside of the Bollinger Band, either it's telling you that there is too much pressure to go to the upside, or the price is just being extreme in order to go to the downside. So that's what you should know about the BBMA. So now, guys, what we should understand with this thing is, if the market does these things, excuse me a little bit. Sorry about that, guys. The phone calls, I even forgot what I was talking about. So, but let me just talk about what I was saying about the BBMAs, guys. So in BBMA, what you need to know is that we trade re-entries, guys. We trade the re-entries, and re-entries, guys. On re-entries, you will find that most of the time, it will be highs being taken out, guys. That's one thing for sure. Highs will be taken out, guys, most of the time, guys. So if you're looking for a re-entry after a CSM, or a re-entry after a CSD, so either a high will be taken out or a low will be taken out, guys. Most of the time it happens like that. So you just have to understand what high has to be taken out, or see what high has to be taken out, what the market has given you as a high. So for instance, guys, let's just go through this one here. We're still going to go through our other ones, guys. So As you can see, the market was going down. I don't know if here is a zone or what, because I have this blue line here. So it might be a zone. It might be a zone. Just see if this is a zone. So as you can see, all this, this is me back testing this thing, guys. So as you can see here, we have this zone there. So this area there is a zone. So as you can see, we have this zone. The market went up, and there was nothing that came back to this area, unless this, yeah, this was good. So let me just show you here. So as you can see here, this will be your demand, guys. So you have an engulfing, then that's your demand right there, and the market must come back and respect that, guys. So that's what happens most of the time. So if the market comes back to that area, you know the market is going to respect that. That's what we think might happen. So if we see that happening, we start thinking that the market might come and respect that area. So let me just go to that was weekly. Let me go to monthly and see what is happening on monthly. So as you can see on monthly as well, we have the market going down, guys. We have this big candle going to the downside. So this, if it closes like this would be a CSM. So let's just go back to one. So on a daily time frame, guys, this is a weekly zone. So inside the weekly zone, guys, let me show you something inside the weekly zone. So when you see a weekly zone like this, guys, you start thinking of the market turning. That's one thing for sure. But before the market turns, there is something that's going to happen there. The market has already created a CSM, guys. What is a CSM? It's a candle that closes outside your Bollinger Band, whilst the Bollinger Band itself is curving outside. It's not parallel. As you can see, the Bollinger Band there is not here where this candle is. As you can see, it's curving outside to the top. What is happening to the bottom? It's curving outside to the downside. So it means this candle is a CSM. Unlike this candle, it closed outside, but it is not. No, sorry, it didn't close outside. It's a bullish candle. Let me see which one would be something like this, guys. As you can see, this candle there, I think so, didn't close outside. Looking for a candle that closed outside. So sometimes, guys, you have to be aware. Yeah, like this one here. As you can see, this, guys, it's almost the same. The candle, this is just flat, it's just parallel. So you cannot really say this is a CSM. And this one as well is not a CSM. As you can see, the last candle that closed outside, it would be a CSM, guys. This would be a CSM. I'm looking for something, but let's just go on with what I was doing. This, but I think you get what I'm saying there. So now, because the market has created a CSM, guys, the only thing that is going to stop this thing, because this is a CSM, the only thing, this one you should know, the only thing that is going to stop a CSM, guys, is a MLV candle or a CSD candle. That's the only thing that is going to stop this thing, because this one just tells us the market will still continue to the downside. So this candle here, what I'm thinking is going to happen is that the market is just going to go down. When it gets to the area here, create an MLV, then push up. If the market is going to go to the upside, it will push up, create a CSD above that high. Then we know that the market has created a CSD, come back to create a re-entry, move to the upside. That's what I'm thinking, guys. So, but what I'm here to talk about today is not that, but this. I want to talk about this, guys. So let me just do the replay. Where is that thing? There. So I'm going to replay this, guys, as it happened. So as you can see, this was a CSD. This is a today thing. So I said it is important to know your supply and demand and your supply and demand and your thing, your support and resistance. So as you can see, guys, there. So as you can see, the market is here. I mean here. So when this thing closed there, when it closed there, so the other thing you should be aware of is if the market is coming to that area there, what are you expecting on that level? So if this was happening, let me just do this and say yes, and let me just put this one out first. Let me take out this candle. So without that candle, guys, it means we have something there. Let me show you something there. So without that candle, we have this area there. This is the area where we need to see something in that area. In this area, we need to see support and resistance and our supply and demand zones. Those are the things you must start looking for when you see a CSD, I mean a candle coming to create a re-entry. In order for it to turn, it's going to turn on a resistance or your support and resistance or your supply and demand. That's where it's going to turn. So let's go and check out on a lower time frame. If we are on daily, let's check on 12 hour if we have a zone there. No, my network is very slow. So as you can see, guys, when you look inside that zone, guys, where is this thing? That thing is here, guys. So we are there. So we are having a base there. So this base here. So we have a drop and a base and a drop. So this base here, guys, tells us that the zone that we are looking for is there. There is a zone there. So now we have a re-entry is going to happen. We are expecting a re-entry. And at the same time, we are expecting, we have a zone. So if you have a re-entry, you must have a zone. If you don't have a zone, don't take that re-entry. That is what I was saying at the beginning of the video about if your system allows you to leave other entries, other trades, and tell you that this is not going to be a good trade, then you have something there. So now, this is what I'm telling you. If you see that there's a re-entry but you do not have a zone, Do not take that re-entry. Leave it. So let's go to another one. Let's go and see. So now we are here on 12 hours. So we saw that we have a zone there. Let's go back to daily. So when you go back to daily, guys, look at where that zone is. So if you are someone who's going to trade that thing right there, when it touches, then you're going to be a loser because you still have to counter for this zone until to that top. So as you can see, that is a very big zone. You cannot withstand the stop. I mean, 755 points. So it's about 75 pips. So you cannot have a 75 pip stop loss, guys. Yeah, for people who are already in these things for a very long time, but they also have to do their money management and all those things, so they won't take this one. So let's just go forward. So now we want to see the price touch this zone while it's still touching this area. That's what we want to see. So let's go and see one candle. So the price touched the zone there and closed inside the two, inside, not above your mahi, which is moving average, the higher moving averages. Then these are the lower moving averages. So it closed not above, but inside them. So either it rejects them or it closes inside them. It's fine. So this is a confirmation that we have a re-entry. So if you have a re-entry, then you move to 4 hours. We were on daily, then we move to the next time frames. Remember, we have 3 time frames that we use in order to confirm. That is multi-time frame analysis. You analyze with 3 time frames. Your first time frame is the re-entry time frame. The next time frame is the confirmation time frame that confirms what you have seen, and you must look for extreme or a re-entry. Then the last time frame is your entry time frame, where you will either see an extreme or an MLV. So let's go. So now what I see here is the market went there to create a re-entry. Let's go forward. No. Sorry, I must not go forward. I must just so let's go to 4 hours. So when you go to 4 hours, you need to see your extreme. Those are the kind of things you need to see. So as you can see, guys, look at this. Look at this, guys. Look at this. This is not yet extreme, but as you can see, we have moving average outside. This moving average outside as well, it shows that the market is extreme. Right there, the market is extreme, but we still need a reversal candle to see that that market is extreme. So inside that zone, guys, inside this zone, guys, you have all of this. You have this candle, you have this candle, you have this candle. So all of this is a drop base, drop base, drop base. So on this one, guys, we do not have an extreme yet. So in order to have extreme, we have to push the market forward. Let's see. So now you have an extreme right there. So when you have extreme right there, you move to a lower time frame, which is 1 hour. So when you move to 1 hour, guys, what you see there is that the market has created a CSD to the downside. So you have that, then the market created a CSD to the downside to prove that that thing you saw is an extreme. But now we do not have an extreme on what we call, we don't have extreme on your 1 hour. So we need to continue to check for an extreme or an MLV. So let's go forward and check. And let's just do this. Let's go forward. So the market started. So some people would say, but we have a re-entry there. Why don't we take the re-entry? Our codes. So these pairs, they are different. They behave differently. Some will use re-entry extreme than re-entry, but some will not use it. Like Euro USD doesn't use re-entry extreme re-entry. It will happen, but you are going to fail many times. So now, remember, we still have this high there. Market might have taken a high where this was the high, or maybe this was the high, because for March, then for the 7th of March, this were the very lows. This was the high on the 8th of March. Then on the 8th of March, this was the high for March. So this was the high on the 4th of March. So, but let's just continue and see if we can get an extreme or something there. So let's just do this. So, all right. Okay. So this guys, this candle there would have been an extreme if I saw this candle would have turned red here, or the next candle turns red, then I would say this candle is an extreme. Then I would take a trade to the downside. Let's continue. So right there, guys, this is where I will take my trade to the downside, looking at that area. This is where I will take it, remembering that we have to, but the other thing you have to realize is that where are we? We are on this area there. So let's go back to 4 hours and see what is happening. You might find, because remember, we have this EMA 50 outside of the Bollinger Band. So once the EMA 50 goes out of the Bollinger Band, you expect 4 hour to create a re-entry. So let's see on 4 hour what is happening. So as said, the 4 hour was going to create a re-entry. So let's go back to 1 hour. So on 1 hour we are here, guys. So this, let's just check what is happening. So let's continue. So the market created an extreme right there. So that would have been an extreme. So, but we are not trading to the upside. We want to trade it to the downside because it's a daily extreme. It's a daily re-entry. So we do not want to trade to the upside. It has hit a zone. This is a zone. So let's see if we can get something. So we have that. We have this candle outside. So remember, we are still looking for an extreme here. We are not working with 4 hour anymore. So after that, that is our extreme, guys. Right there, that is our extreme. So you have to take your trade right there. When that thing closed, then though the stop loss is very high. The stop loss is so high. So, but that's where you should start thinking of trading to the downside and see what is happening. So, my first take profit will be around that area, but that stop loss is too much. So you might want to go on a lower time frame. Wow. No. So you might want to go on a lower time frame to see if you can get a refined entry. So let's go to 15 minutes and see if we can get a refined entry. So on this one, guys, I will definitely look for an MLV of some sort, or I will look for a trade anywhere to the downside, but I won't take a trade this big with this big stop loss. So let's continue. So that was that. So I would think of trading this area there. So let me see if I can do this and say this is here. Let me just move this and use a new one. So let me just check. So I would say there. Yeah, that's better. As you can see, that's very much better. And let me see, the ratio will be 3 is to 1 is to 4, 1 is to 5. Let's see, 1 is to 5. So that would be the area where I would like to trade it. You can even put after this you can even put your sell there and the stop above. So but I like this to come at least touch that area, then we go down. Unfortunately, it didn't come back to that area, so the market just kept on going to the downside. So we have this as a re-entry. You can enter there as well. So this is an area, a zone, that is your re-entry there. Let's see. So I think we are there. That's where we are right now. But because the market didn't touch that area, we might see the market go back to that area, this area, touch it, then continue to the downside. So we just have to wait and see. So that's that, guys, about that. So but let me look for another example. I saw this area here, so let me look for this as an example. So guys, let's just do this one now. Okay, let me do this and say okay. All right, so if we are expecting, okay, this is a CSD, guys. So if this is a CSD, we are expecting the market here to go and have re-entry there. If we see the market going to that area, we do not force the market to go there. We wait for the market to go there. Then we can say we are looking for something. So let's just look at this and say, okay, that's where we think the market is. This Mahi is. So we look for a zone inside that area. So let's look for a zone. But as you can see, already on a daily time frame, we have this big bullish candle and the spinning top or something, and we have this engulfing to the downside. So let's just check what is happening. So on 12 hours, let's just check on 12 hour. So on 12 hour, what we see there is we have a zone at the top there. So we have a zone here, but this candle, guys, this candle here, it even came below the close of this candle. So it means this candle is very important. So what you do, support and resistance, your support and resistance right there. So support and resistance, let's look at, okay, as you can see, we have a touch there, we have a touch there, and touch and touch. So it's a good support and resistance. Let's just do this with your, let's see what's happening here. Let's look at, let's use the line and see. So on the line it doesn't show that good, but what I see on this lines is that we have this area there that's touching there, and yes, okay, then let's back to our candles. So when you look at this, now we go back to daily. So we are not going to trade anything here. We are going to trade things above here and into that zone. So remember that daily, this candle starts from here to that area. So even if the market doesn't come there, but around here, we are expecting that. At the same time, as you can see, we have these two highs here. We have a high there and we have a high there. Those are relative highs. They are called so by CIT, ICT or ITC, something like that. ICT, Inner Circle Trader. So he said that liquidity will be taken either above the highs equal highs on old high and previous day's high or low. So now we have this high of this day, this high, old high. So let's just see if we'll take out this high. So let's go to it and see. So when you go to it, what do you see? So you have a touch there with a rejection to the downside. The market closed there. So if you have a touch there with this, and the touch was there, the zone is there, and but this also is a zone on its own. The zone will start from there to there. So let's go and check. Let's go and check on 4 hour what we have. So we go to 4 hours. So when you go to 4 hours, guys, we are looking for a re-entry on 4 hours. So when you look for 4 hours re-entry, okay, so the video was paused a little bit there, so I had to run some things. So now, guys, remember what I was saying. I was still talking about the re-entry. So on 4 hours, guys, when you get to 4 hours, you're looking for an extreme. So, and we are looking for an extreme after it touched that zone, guys. So let's look at for an extreme, and remember, it's an extreme when that thing closed. So the last candle is this one, guys. As you can see, this candle didn't touch your Bollinger Band at the top and didn't close below your deviation 1 Bollinger Band. So if this candle would have closed below your deviation 1 Bollinger Band, whilst this outside Bollinger Band is caving inside or it's constricting, then I would say this would have been my extreme. So at the same time, guys, as you can see here, we have a zone there. This is an engulfing. Remember, it's an engulfing inside an engulfing, and as you can see, look at that. So this is an engulfing. So remember, we turn on zones only. We do not just turn because we have an extreme. We have to have an extreme on inside a zone. So let's see. So now the market is here. We don't have an extreme. Let's go forward and see if we can get an extreme. So not yet. Yes, then we have an extreme right there, guys. So once we have an extreme right there, we move to 1 hour to check what we have on 1 hour. So we have extreme that side. This side we have a CSM. So we do not have that one of re-entry here. We were gonna have CSM and re-entry, but we cannot use that one. The only thing now we can use, guys, as you can see, is if we get an extreme on 1 hour. So this might be telling us there will be an extreme, or the market will just do a re-entry and fly to the downside. But let's just wait and see. Let's go with 1 hour looking for an extreme or an MLV. Okay, now we have the extreme. There is the extreme, guys. So once you have this candle that touches that and close there, that is our extreme. So if you're going to take a trade on this one, guys, you will take the trade like this. That would be your candle there, and that would be the high there. 294 points. That would be 29 pips. Not bad, but let's continue. So that is our trade. Then let's see where we are aiming at. Let's aim this zone, but it's very close. But I like, let me just do what I like doing. So if you are still growing a small account, just take 50 or 500 points a day. 500 points. Let's continue. Let's see what is happening. So the market did that and wants to go up. I don't know where the market is going. My stop loss is still there. Continue. Let's see. Okay, my 500 points. I'm looking for 500 points. Let's see if it did 500 points. Let's see how much is that. Now the market is going back. So let's just see. So the market did something like 429. It's 429 right there. 450, some 454 or 444. That's what the market did right there. So the market is going to the upside again, because as you can see, we had this as a CSM. The market came there, created this as an MLV. So it just closed even above. So the only thing that's going to stop this is if we get an extreme on the higher side of this. So at the same time, you can just look at this is the 21st. So let's cut this thing there. Right. So when you are there, that would be a good trade. So you would say your market, you got re-entry extreme extreme. So I will continue this talking more about this on the next video. So you just have to back test it and see if it works for you. But I tell you, it gives an edge in the market. So it's okay, guys. Cheers, guys.